Hey everybody, welcome back to the channel. Today I want to go over the PM Silver Bullet on Thursday, September 7th. Be sure to join the free Discord group below. I am making a Silver Bullet indicator that has a lot of the things that everyone's been asking for from my charts, the different backgrounds, the different sessions and things like that. We got several other surprises that I put in there as well. That's going to really help a lot of people. So make sure you join the Discord group. And one of the announcements in the Discord group is about that Silver Bullet indicator to be in the beta group. It is going to be a free indicator once it's published, but there is going to be a little bit of time for people to beta test it first. So we also cover IDR, DR, IDR. There are some people that go live, do live streaming trading in there. Several people share their trades, markups, breakdowns. We do live backtesting sessions. It's just a great resource if you're looking for it. A lot of people have asked if I have a Discord. I am an admin in that Discord, so the link is in the description. So this is the PM Silver Bullet session. What do we have here? This purple line is the new week opening gap. So we got some relatively equal highs here on the new week opening gap, right? This is also the lunch hour high right here. So I'd ideally like to see that being swept, and then we'd probably target down here where this is the lunchtime low, right in here. Actually, that's not the lunchtime low is right here. But you have some fair value gaps right here, so I'd be targeting down here. I'm going to buy and sell based on TradingView and go candle by candle. So let's see what happens here. All right, so now buy side's taken right there, obviously. Okay, so for me, the market structure shift would be this candle right here. I'd want to see broke. That's good, candle. Okay, well, we have a fair value gap right here. Okay, so it might be if we break structure, that'd be a good one right there. Market structure shift to downside. We have a volume imbalance right here. Okay. It keeps respecting that volume imbalance. You know, I'm going to take a trade on the volume imbalance because this might be a breakaway gap. I know if you pull the fib from here to here, that's in a discount, right? So a lot of people are like, well, wait a minute, this is in discount. Why are you taking the trade? Well, it's respecting the volume imbalance right here. Yeah, two of them right there wicking through. This could be a breakaway gap, and you got the new week opening gap right here, which is once it's traded through, also acts as resistance as well. So, you know, I'm gonna take a trade. I'm gonna sell two there. I'm gonna sell. I'm gonna put my right there, and look at that. That's only 3.25 handles to go above this high. So I'm fine. Even if I had it, if I took this trade up here, I would still. It'd be two. I'm literally risking one handle to do the volume imbalance. So to me, it's worth the risk. Okay. Where am I aiming for? I'm aiming for this low right here because that's over 1 to 2. So I'll take a partials right here. Why here? Well, I like to go over 60%, but the bigger reason is because you have this big fair value gap right here, and I'd ideally like to see it get traded through. I mean, you could go with the consequent encroachment, which would be about right here, and that's close to 60%, so I'll use consequent encroachment, but ideally I like to see it trade through because I know this can be resistance, so once we get through, I know that we're probably not coming back up. So, but for the sake of the video, we'll use consequent encroachment, and then the draw on liquidity is right here. Obviously, we can also use the lows down here for a lunchtime low, which was right here. This is the third draw on liquidity that we have. That's lunchtime lows right here. So let's see what we did. We sold two, so Let's see how it goes. See, it's still respecting that volume imbalance. Still respecting it. No candle body above it. Do these long wicks freak you out a little bit? I'm comfortable with my stop right above the high. We've already taken out sell side liquidity. We've had relatively equal highs. I'm comfortable with my stop. And it could trade up in here, sure. You can hit this fair value gap. It'd still be fine. You know, you put the trade on, you need to be willing to accept the risk, and I'm comfortable with the risk. Volume imbalance seems to be holding pretty good right now. I need a candle close below the partials on trading view. So one more close, right? Oh, okay, close. So close. All right, there I can take one off. Take one off there because it's a kind of close below it. Trading view, you have to use end that candle close. So my trailing stop, put this on here. Oops, right now would be one tick below, so it'd be right here. Where my trailing stop would be. Okay, so in all honesty, as price is trading down here, I'm moving my stop to here, above these highs, one tick above those highs. This relatively equal highs right here. Why am I doing that? Well, I trade Apex, right? And Apex has trailing drawdown, intraday trailing drawdown. So it's not the end of the day. So if it comes up, takes me out, all of this is used against me. So I've got to trail it pretty tight. So that's where I'd put it. Especially because as it was trading down here, you're what, like half a handle away from hitting your TP. I can't allow, you know, all this to come back and take me out. So a little bit different than how I would normally trade it. If I wasn't have a trailing drawdown like on my live account, I would have just left it here, and then as it came down, you know, maybe move it down later on, but I probably would have just left it there and to give it room to play out. It could fill in this fair value gap right here. Oops. This fair value gap right here. So I know there's an order block right here, so it can trade up in here before it came out. So I wanted to give it room. So we'll see how it works. All right, flatten again, right on the line there. Perfect, and close right there. Okay. All right, so now we could say, hey, I'll just mark this out. Here's a market structure shift. Well, technically it's down here. Right there. Let's see if I put this on here. Market structure to go up. Right there. You also have a fair value gap right here. Would I take this trade? No. If there's a trade set up here, I wouldn't take it because I've already got one in. I take one, I'm not trading back up. I'm just showing you what you could see. Hey, this is, maybe you missed this, right? Liquidity has obviously been taken, right? This fair value gap's been filled. Okay, so now market structure shift to go long. Let's see what we do here. Don't get it, don't get it. Where would you be targeting? New week opening gap. Let's take my trailing stop off so it's not confusing here. But look at this. You also have a fair value gap right here. Okay. And when it just got traded through, now that's an inversion fair value gap. So now if price trades back into this, you could take a trade. Okay, so you know what? Let's just do this. Let's just try this out. Let's buy two right there. Okay, where'd my targets go? You know what? Let's do that. Let's do 3 and let's go to here. Well, it's got to go to 2, so let's do that. Where would I take a partial? Somewhere right in here. Probably I'll take a partial right here. Take a partial right here. Okay. Move this to 1. All right. Okay, now this right here becomes an inversion as well. Okay. All right, so I'm going to sell 1 there. Where's my stop, right? Got a trailing stop. Trailing stop would be right here. All right, so I'm gonna close it right now, flatten it because we would have hit it right there. That's where it's hitting it, stopping right there. So we're already out of the trade. See, it would have hit us, would have hit us out right there. All right, so let's move this back here. We got out right there. All right, we started the 2 o'clock p.m. Silver Bullet hour. We had new week opening gap here, relatively equal highs. Price, it was a lunch hour high as well. It took out the lunch hour high, came down. We had a market structure shift, and we had a fair value gap and a volume imbalance. Volume imbalance was being respected, so we took a trade, and we were aiming for the, these 2 lows right here. We took a partial about the consequent encroachment of this big fair value gap here, about 60 to 70%. And then to hit our TP over here at like 2.5 R trade. Then we saw that we had a market structure shift to go long, and we saw that there was an inversion fair value gap, and when it came back into it, we took a trade. We were aiming for the new week opening gap, which is kind of like a magnet, draws a price back up to it. So we took our trade, and when we traded past this inversion, trading past this fair value gap, making that an inversion fair value gap, we felt a little safer on our trade, and we took a partial, about 60 to 70%, moved our stop to break even, and then we got taken out at the new week opening gap. So those are your 2 Silver Bullet trade setups for Thursday, September 7th.